This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial endowment expert, Harold Siegel. We're taping today's program on Thursday, April the 12th, 2018. Our time is 8:15 a.m. Mountain. A little later on in the program, we will talk about the tragedy here in Canada involving the Humboldt Broncos. Connect with Harold at 1-800-432-1022. 1-800-432-1022. His website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. Let's take a look at what's happening in the markets this morning. US dollar at 89.93. Canadian dollar at 79, which is 126.15. Gold 1345.30. Silver 1652. Gold silver ratio is 81. Platinum $9.29, palladium $9.50, WTI $66.50, Brent $71.63, nat gas $2.69, Bitcoin in US dollars $76.88.56, Bitcoin in Canadian $96.92. Now the Dow 24,475, S&P 2656, Nasdaq 7134, TSX 15,288, and it was a very crazy week due to, once again, as Harold has warned us, Donald Trump is the wild card in this whole scenario. Whether it be the situation in Syria, where he has made threats against Syria and Russia. Obviously, there's a concern about North Korea as well. And Harold, it's hard to believe Donald Trump sending out a tweet talking about firing bombs over to Russia and Syria. He is a wild card, and that's why we believe you need hard assets in your portfolio.
Oh, you bet you do. I mean, yesterday on Wednesday, the market in gold was up $17 on the day. In fact, we had the highest closing gold in 3 years. And then the market's down about $12 today. So we're getting very close to that very important 1385 number that I've been telling you about. 1385 is major resistance in the gold market. If we get two closes in a row above 1380, 1385 in that area, we do believe that we're going to get a breakout in gold. Now, gold could break out anyways. I mean, gold has done extremely well, and it's holding in there. It just has not sustained the rally that we're looking for yet, but we're getting very close to that. Obviously, with what's happening in Syria is of tremendous concern. But the threats towards Russia, even though Russia threatened basically the U.S., this is not a good situation, because between China and Russia, the U.S. just isn't getting along, and China owns most of our bonds. So the fact is that Trump is not only threatening China, but they're also threatening Russia and Syria, and that is why the gold market is coming very close to breaking that very, very important number of 1380, 1385 in gold. So again, at this particular point, the dollar is not doing a tremendous amount. It's trading in a range. The U.S. dollar has not broken out above 90, even though we've seen interest rate hikes, and there's talks of more interest rate hikes. The U.S. dollar has not taken off, which tells me that Trump is purposely keeping down the value of the dollar in order to make trades more attractive for the U.S. So at this particular point, again, if we're going to see the gold market break out, this could be a phenomenon. We could literally see gold run with a U.S. dollar that is not necessarily weak or falling. So normally there's an action-reaction type of market there. But again, we're seeing the markets react differently than almost at any time that we've seen. I don't think that the markets have quite figured out, how Trump rolls at this particular point. So again, we'll see what happens with Syria, Russia, and China. But at this particular point, things could heat up, and any one of those situations could push the price of gold above that 1380, 1385 level. Then we could get a breakout in gold that could literally take us up to the highs that we saw back in 2011, which was close to $2,000 an ounce, around 1920.
1-800-432-1022. 1-800-432-1022 to invest in gold. Speak with Harold personally and privately about adding hard assets to your portfolio. His website is rarecoloreddiamonds.com, rarecoloreddiamonds.com, telephone number 1-800-432-1022. A little later in the show, we will talk about the tragedy in Saskatchewan with the Humboldt Broncos. And so far, that GoFundMe page has raised $9.3 million.
Wow, that's great.
Unbelievable. Quote from John Hathaway. This is in our free weekly newsletter. Get our newsletter from Herald. John Hathaway, Senior Portfolio Manager, Touqueville Asset Management. We believe that 2018 will mark a significant turn in the financial markets, which will be adverse for conventional consensus-based investment strategies, and quite positive for gold and other safe haven assets. It's quite likely, in our view, that a new up cycle for gold could register new highs for the metal, and he's talking about at least up 50%, and gains of 100% or more for many precious metals mining shares. In a financial world that has been notable for disruptive change, there remains one constant: human nature, and the resulting inevitable ebb and flow of greed and fear. Gold, a proven antidote to systemic risk, is in our view likely to return to favor. That according to John Hathaway, Senior Portfolio Manager, Touqueville Asset Management. Now, Gerald Celente came out this week and said, with all this volatility that's going on, gold prices have not moved much. They're stuck in the $1,300 to $1,350 per ounce range. Even on Friday, with all the volatility, gold only moved up a couple of bucks. That is the indicator to watch. And here is our forecast that gold has to break above $1,385 per ounce. It has been unable to get there. The next big number would be $1,450. When it solidifies over that, a forecast jump to $2,000. Gold is the ultimate safe haven asset. It has not been acting like that during this market shift. Now, in our newsletter, we do have stories on gold, and it's interesting to note that over in Germany and in China, people are piling into gold ETFs. Anxious investors from Germany to China are seeking shelter in gold ETFs. And Harold, I know that that number that you've talked about in the past is 1380. We break above that. You usually say, what, 3 closes above 1380?
2 would do it.
So 2
closes above 1380 would solidify that we're going to the next level, unless something happened in the market to offset that, but it would have to be, something substantial. There would be a reason, again, why gold would break above 1380. Now, what you've got to understand is how the futures market trades. Futures traders are short-term traders. We're more long-term holders of the actual metal, but people that trade gold and silver in the futures market are much short-term traders. They put up a goodwill deposit. The leverage is extremely heavy. If the market goes their way, they make a tremendous amount of money. If the market goes against them, they could lose everything. So we don't advocate that in any way, shape, or form. I grew up trading the futures markets, but it's not something that I recommend to my clients. It's just way too risky, and 90% of the people that trade commodities end up losing their money. So it's obviously something that I would never recommend to my clients. But the support and resistance levels are also determined by how futures traders are trading. So when I say that there's heavy resistance at 1380, it's because gold hasn't broken above that price for an awful long time. So as it gets closer to that, there's more and more resistance. If it can push through, if the news is strong enough, and it can push through that 1380, well, then there's buy orders in the futures market above 1380, means that speculators will place bids in the market above the price of 1380. So if gold breaks 1380, their price gets filled, all these orders get filled. Then the market starts moving up substantially. And then by the next day, we have another close above 1380. Let's say it's at 1387, 1388 now. Well, then the market's really going to take off because all these orders got filled. Now the market is looking bullish. Now the bulls are coming back into the market. And then the thing really starts to take off and run. And we all remember the run in gold and silver because we called it back in 2000. It was our radio show that told everybody to buy gold at $250. And at 250, we had an 11-year bull market that ran gold all the way up to 1920. Now understand this, that if gold takes off again, but instead of 250 this time, it's going to take off from 1350 or 1380, where is this bull market going to go to? If things really heat up and Trump continues to do what he's doing but follows through with some of his threats, we could easily be looking at $2,000 gold. And the fact that this other analyst basically quoted my numbers exactly only means that what I'm telling you is 100% true. These are true numbers, just like there's support in the market, which is the opposite way. At 1325, there's heavy support in the market. It means that if gold got down to 1325, it would have a lot of trouble closing below 1325 unless something very bearish happened to push it below that. So support and resistance levels are extremely important. Futures traders use them for short-term indicators as to which way the market is going to go short-term. We use it as a long-term barometer because, again, I know where these support and resistance levels are. So those that want to get involved in gold, we want to see you make money. We sell physical gold. We don't trade futures or options or ETFs or anything like that. You can buy physical gold from us with no commission and no spread. That means if gold's at 1380, you buy it at 1380 and you sell it at 1380. We're not going to take any spread. We're not going to take any commission. We're not going to take any part of your profits. We can deliver it directly to you, or we have storage facilities that are available to you at no cost. That would mean that we could actually store your gold for you and trade it for you with no percentage of your commission. Again, those that know us and have listened to our show for since the year 2000, for about 18 years now, we called the biggest bull market in gold. I've known this gold market and I've traded gold, for over 30 years now. So again, gold is certainly looking like it could take off at this point. Now, at this time, we do not handle smaller amounts of gold. We only handle kilos. Right now, a kilo of gold is in the 40,000 range. But again, at $2,000 an ounce, you're up, about $600 in profit per ounce. So again, there's a lot of money to be made in gold. And those that have traded with us in the past know that when this market does run, we've made a tremendous amount of money for our clients and listeners to the show, and we don't take any part of your profit.
1-800-432-1022. 1-800-432-1022. Speak with Harold about investing in hard assets, gold. And it should be noted, some quick hits from our free weekly newsletter. Top 20% of Americans will pay 87% of income tax. Households with $150,000 or more in income make up 52% of total income nationally, but pay a larger proportion of total taxes, according to the Wall Street Journal. Now, CNBC coming out and saying, obviously, Mark Zuckerberg was in front of Congress and had to defend himself. If you invested in Facebook in 2012, when it made its initial public offering, the investment would have seen an increase too. A $1,000 investment 6 years ago would be worth $4,300 as of Wednesday. The median sale price of a house in San Francisco soared to $1.6 million in the first quarter, and we talked about it on a past podcast. People making $400,000 a year, which is the 1%. They, if you can believe it, cannot afford one of those homes. And that is an absolute shocker. In fact, in San Jose, homes were going up around $80,000 a day, if you could believe it. So in the first quarter, almost 24% jump from a year earlier, according to a new report from Paragon Real Estate Group. That topped a previous high in the final 3 months of the last year by 100,000. Now, this is a big one. We've talked about this before. Harold touched on it. This is from Zero Hedge. From what we understand, the Chinese government has halted its purchases of U.S. treasuries, despite the direct encouragement, according to Chinese sources, by U.S. Treasury Secretary Steve Mnuchin for China to stay put. Beijing has apparently discontinued purchases of U.S. treasuries for the past few weeks. And Harold touched on that. He said if they sold, and they have about 1.7 trillion, and we also said even if they stopped, it could be very interesting for the United States in this trade war. Canada is the second worst performing stock market in the developed world this year, after Switzerland, according to data compiled by Bloomberg. It's down 5.8% versus a decline of less than 1% for the S&P 500. The composite benchmark price for all residential properties in Metro Vancouver is $1,084,000, a 16.1% increase over March 2017, and a 1.1% increase since February of this year. Phil Moore, real estate board president, says even with lower sales, prices will remain high as long as the selection of properties are slim. And finding a condo to rent in Toronto is very, very difficult, renting at all. The average monthly rent in Canada's biggest city surged 10.7% in the first quarter from a year earlier to $2,206 Canadian. And that is according to Urban Nation. Who's getting a raise of 10%? Not many people that I know of. Obviously, very, very difficult times in Toronto. And one thing I wanted to pass on, Harold, and this is another one of those warnings. In the past, we said, be careful, very careful with cryptocurrencies, Bitcoin. Well, this week in our newsletter, Canopy, and they're a cannabis company, tops BCE, really one of the biggest communications companies in Canada, and Manulife as marijuana stocks are ramping up the trading. Canadian pot stocks with little or no revenue are quickly becoming the most actively traded stocks on the country's exchanges, topping blue chip companies like BCE and Manulife. Canopy Growth Corp and Aurora Cannabis were the fourth and fifth most traded stocks by value on the S&P TSX Composite over the past 3 months, with only the three big banks posting higher dollar volume. The two pot stocks alone combined for more than 500 million Canadian a day in trading activity, providing a boost to exchanges and to banks that are ramping up lending and support to the industry that is in its early stages as legalization approaches here in Canada. But Harold, it's something that I think people need to be very careful of. I know different financial analysts have warned there's not a lot of money to be made in pot stocks, so be very, very careful when it comes to investing in that sector.
Better believe it. You know, the thing is, it appears that Canada is taking a different view than the U.S. because there's only a few states in the U.S. that allow pot sales. But the thing is that it's because it's illegal in most of the states, you can't travel with it. Fact is that no bank will take any money from a pot company. So everything that they do is in cash. You're not allowed to use credit cards. So the fact is, in the United States, because it is still illegal in most of the states, the fact is that I don't believe it's doing tremendously well because, again, everything is in cash. And the banks won't allow you to put that cash in their bank, nor will they issue credit or credit cards or loans or anything. So, again, I think that the pot situation in Canada is different than it is in the U.S. Now, eventually, again, because Colorado has done so well and made so much money out of taxes, on pot sales that California and Nevada and other states have followed through. In Florida, they just approved medical marijuana. But I don't think these companies are making a fortune. I mean, I just don't think that the markup is there. So we'll have to see what happens. It's not something personally that I would put any money into. I did want to touch on the bonds again through China and the U.S. How stupid could the U.S. possibly be to think that they could put these sanctions and everything against China, these trading sanctions and all that, and all of a sudden think that China's going to be okay with it? I mean, the bond market is in such disarray at this particular point, and we've actually talked about it on several of the shows that we're so close to a disastrous level in bonds, and it appears that that we don't care about that. That the fact is that if China doesn't buy the U.S. debt, and China all of a sudden starts to liquidate our bonds, we're in huge trouble here. I don't know where in the world the money. I just don't think the U.S. has enough money to buy back $1 trillion worth of bonds. So I think that is one of the biggest issues that we're confronted with right now, and is something that definitely warrants us paying a lot of attention to, because we're at a crossroads right now. We're very, very close in the U.S. to a problem in the bond market without China being upset with us. So again, I'm really shocked that the Trump government is that stupid that they wouldn't have taken into consideration that if you get China that pissed off, that they're not going to do something against you. And that's exactly what's happening. I mean, it's the most elementary thing I've ever seen. So again, be prepared, because if the bond market goes south, there's going to be some serious, serious issues, and the stock market could take a heavy, heavy fall. And again, even though the U.S. market, has moved up substantially, the Canadian stock market hasn't moved up at all. So again, it's a similar situation that most Canadians that have their money in retirement savings plans are not making any money whatsoever. It's a very difficult and trying situation. On one hand, real estate is going up 10% in British Columbia, and it plummeted in Toronto. And the fact is that, as you said before, the price is going up so substantially, but people aren't making 10 or 15% more on their paycheck. So how in the world do people in Canada afford $1 million homes? I mean, it's really an unbelievable situation to think that things are getting that expensive, that the stock market in the States is that expensive, that Bitcoin was that expensive at $20,000. Who can buy these? Only the very wealthy investors that have that type of money, and that's only 1% of the people. Most of the general public cannot afford to buy stocks and cannot afford to deal in situations like Bitcoin and real estate in general. It's just way too expensive. So again, I think that there's going to be some real fireworks happening in the U.S. coming very soon. And again, a very strong recommendation is to buy some physical assets that you own outright. Again, we're recommending gold at this point. We think that the next major level, once gold breaks 1350 and 1380, especially 1380, we're going to see a massive run up in that market. And we don't want to chase after the market. We want to be in before the fact, not after the fact. And again, gold could take off, and we could see $2,000 gold. That's a $600 increase. That's a sizable move in a commodity, and we believe that that's going to happen fairly quickly.
Just a quick correction on my part. I said $80,000 a day, getting quite excited, obviously. Home values are rising by $800 a day in San Jose, and you can read that in our free weekly newsletter. Connect with Harold. Learn about investing in hard assets. 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. And we talk about people getting raises. Well, it's going to cost North Americans 14% more when it comes to road trips due to the gas price going up in Canada and the United States. And that's one thing you do here in Canada. We had oil at about 140, and we had gas prices per liter at about 120, 130. And yet here we are with oil prices around $60, and we have gas prices that are around 110, 120. And people are saying, what's going on here? It is very, very interesting, but people are not getting 14% increases or 10% increases in their pay to offset what's happening in these markets. And that's the inflation that it really is. A silent killer to all the money that we try and bring in and live off of. One of the things I wanted to get to before we have another ending to the show, Guggenheim investment chief sees a recession and a 40% plunge in stocks ahead. Guggenheim head of investing sees a tough road for the market and economy with a sharp recess and 40% decline in stocks. Scott Menard, who warned clients in a recent note that the market is on a collision course with disaster. And I would get the newsletter in your hands, read that article over, and he says ultimately when the chickens come home to roost and we have a recession, we're going to see a lot of pressure on equities as defaults will rise. So a warning there from Guggenheim. Also, the U.S. deficit in the United States, we've talked about it before. CBO coming out this week saying it's going to surpass $1 trillion 2 years ahead of estimates. So the U.S. budget deficit will surpass $1 trillion by 2020. So they will be racking up $1 trillion deficits in the U.S. Now, one of the other things that we have in our free weekly newsletter, a chart right off the top. Global debt jumped to a record of $237 trillion last year. Norway, Canada, Sweden, China exceed pre-crisis debt levels. So you can see that debt is continuing to be racked up around the world, and it is a very serious situation that ultimately, as interest rates go up, the pressure on those countries that have huge, massive deficits and debts will be obviously strangled because they're going to be paying out a ton of money in the interest payments that go out to investors. Harold, on the diamond front, and maybe just quickly before we get to the diamond front, wanted to mention quickly that actor Daniel Craig's 2014 Aston Martin from the obviously James Bond movie is up for auction. There's an auction coming up April 20th in New York, and that's one of the items that is going to be auctioned. And we also had Russell Crowe. He had a divorce auction and raised $3.7 million on the weekend. He's now officially divorced, and he has $3.7 million in his pocket to go cry and obviously drown his sorrows. Warhol's Elvis portrait could fetch $30 million at Christie's sale. Andy Warhol's full-length portrait of Elvis, double Elvis, is projected to sell for around $30 million. That auction coming up May 17th. And we touched on it on a past podcast, a 102 carat diamond. And this is a blue diamond, is coming up for auction in Geneva. And it is 300 years old. It's the Farnese Blue. You can read more about it in our free weekly newsletter. Now, a couple of stories that are must-reads. Rosy future, investing in pink diamonds, high demand and low supply. I also brought forward that article we had last week. Australia's biggest diamond mine is running out of diamonds. Argyle, they produced 90% of the world's pink diamonds. And as well, there are a couple of stories about flawless white diamonds that are going to be going on auction. But Harold, now is a very exciting time for hard assets. We're seeing it with collectible cars and paintings, and in particular, we're seeing it with rare colored diamonds.
It's pretty scary for most people that are in the stock market when there's a potential of a heavy sell-off. A 40% sell-off in the Dow would cripple this country and cripple the investors. You know, when the market gets this high and there's problems geopolitically and that type of thing, the smart thing is to put stop losses in your position. Don't just be naked in the market, and don't buy into the fact that the market always comes back, because it takes a long, long time. And if you're in your 60s or 70s, you don't have time for that. Make sure that you speak to your broker and put strategic stop losses into your position to make sure that if the market does sell off, that you have some type of protection. Don't forget, in 2008, when the market dropped from 14,000 to 6,500, it just totally fell out of bed, caught everybody off guard, and most people got sold out on margin and things like that and never, ever recovered. It was only the people that stayed into the very end and stayed all the way for the market to come back did okay, but most people lost almost everything. Now is the time to diversify. It's a good time to own gold, as you can see. It's a good time to own diamonds. It's a good time to own hard assets. As far as what's happening in the world markets, there's no doubt in my mind that there's problems right ahead of us. Donald Trump is a loose cannon. He speaks before he thinks. He threatens, and he's threatening China and Russia, two countries that you just don't want to get into it with at this particular time. So again, there's a lot of problems on the horizon. It's an interesting time, but we've got to be sharp and not to speculate. Now is not the time to leverage positions. Now is the time to own whatever you have. And again, we will watch the value of the U.S. dollar. I just don't see that the U.S. dollar is going to make that major rally at this point because the fact is that there is just so much trouble in the United States and so much debt. And again, the gold market is getting ready to break out. So normally, I would say that the gold market is going to run if the U.S. dollar is going to drop. And the U.S. dollar could drop if the bond market goes south. And if that's the case, then we're in for a full-fledged bull market run in gold. And we'd rather be, like I say, 6 months too early than 1 day too late. So again, at this point, there's a lot going on in the market. Get the free weekly newsletter. If you need any information or help with your portfolio, I'm always here to talk to you. And again, that's what's happening in the world markets today.
Connect with Harold, 1-800-432-1022, 1-800-432-1022, and the website is rarecoloreddiamonds.com. Well, it was, I guess, approximately a month and a half ago, we had the shooting in Parkland in Florida. Harold's a Canadian living in the United States, and he goes between Florida and Colorado. And we found out that Harold does not live that far from, blocks away from Parkland School. And if I remember correctly, there was approximately 17 people that were killed in Parkland. Now, Friday night in Canada, we heard about a bus crash, taking the Humboldt Broncos to a playoff game between a big truck and the bus. And we did not have a lot of details, but they came in overnight. On Saturday morning, we found out that 14 people had passed away out of 29 on the bus. Then a 15th person was added. And here just yesterday, the young female trainer, Dana Bronze, passed away. So we're at 16 people that have passed away. And what a young girl and a friend or mother did to raise money for these people was start a GoFundMe campaign. And originally they thought maybe $5,000 or $10,000. They were being greedy at $10,000, they thought. And then they decided, no, we're going to go for it. They put it up to $4 million, and so far right now it is at $9.3 million. The thing that was particularly tough, Harold, for those in Alberta is 10 kids from the Alberta area were on that bus, played for the Humboldt Broncos. And I know a friend of mine who I've known for many years, his son played with a few of those kids. And actually even another friend, a few of the kids had played hockey in Spruce Grove. And his daughter had known them through her son. So you can just see it, it just permeates a community. As sad as you were during Parkland, I totally understand how you feel now, because here in Canada, in Alberta, Saskatchewan, I'll tell you, it was a real difficult weekend after hearing the news on Saturday morning, and it really cast a large shadow over everyone's lives, and everyone was heartbroken. They did have a vigil on Sunday, and that helped a bit, but the money will be there to help those people that survive, and no doubt some of that money will go towards maybe scholarships in the names of the people that have passed away. But Harold, just a tragic situation here in Canada.
Oh my God, Randy, it was heartbroken, just absolutely heartbroken hearing that news and following it. And man, life is tough. There is no doubt about it. We lived through the Parkland thing, and it's not even close to being over. I just walked past the school. It's only 2 blocks from my house this morning, and there's still 10 cop cars there. And the lives will never ever be the same. It's when this type of thing happens and you see your friends affected by it, it's just a horrible situation. I'm just so heartbroken by it, and our hearts go out to all the families and everybody affected by this. It was a terrible tragedy.
Very, very difficult. And one of the things that people were doing today as we tape on Thursday, April 12th, is wear jerseys, hockey jerseys, a jersey to work in honor of everyone involved in this situation. And a few nights before that, what we do here in Canada is you leave your hockey stick outside. And usually it's propped up outside the door or in the garage. And what they ask people to do is leave a hockey stick out. And that was even done at the Canadian Embassy in the United States. So,
wow,
very
unbelievable,
tragic.
Randy. Very, very sorry. Very, very sad for Canada.
Yes. Anyway, we will, Don Cherry and Ron McLean were there from Hockey Night in Canada, and everyone in Canada will be kept up to date with all the media and global.ca, globalnews.ca, a great outlet to go and find out more about where things are at. But Harold, thank you for another great podcast and your knowledge.
It's my pleasure, Andy. I wish everybody a good weekend and a very, very profitable day.
Learn more about investing in hard assets. Go to Harold's website, rarecoloreddiamonds.com. It's like a museum online for rare colored diamonds that you can invest in. As well, if you're interested in investing in gold, Harold has a plan in place that really gets you to profit very, very quickly. Learn more, 1-800-432-1022, 1-800-432-1022. That's it. Another edition of the World Financial Report podcast with me, Randy Marshall, and Harold Siegel. We will talk to you next week.